Welcome to Markets Now. I'm Michelle Rook with Joe Kooima with Kooima Varilek. We see grains in negative territory this morning with livestock futures mostly higher in the early go. And Joe, we didn't start off that way, but both live and feeder cattle futures in the green. I guess the question is can we maintain that strength throughout the session, or do the funds just use that to liquidate some more?
Great question, and thanks for having me on this morning. Yeah, I think we're getting some follow through, especially with the cattle from yesterday's close. Follow through today on a Tuesday here. You look at the charts, and yeah, obviously we broke hard. We broke really quick. It's got some of those stochastics showing that maybe things are obviously overdone down here at these prices, and we just got to get used to these ranges that we have here the last several weeks, if not months, that when it bounces, it's not just going to be a 50 to 80 cent bounce. It's probably going to be, $1.50, all of that. But coming in this morning, you're looking at the open interest, and we just have a massive exodus coming out of there with these funds. Our open interest used to be well over 315, 320, and now we're below 285.
Wow.
So we need to have a lot of convincing to do with some of this managed money to step back in here and kind of trust it. So gonna have to kind of carve out a bottom here a little bit, but we do have a lot of negative outliers that we're battling still against here, and it's tough to put some of those to rest yet.
Yeah, so let's talk about some of those weights, cash trade sliding. Those things have to kind of turn around here, don't they?
Right. Yeah. Weights are going to continue to be an issue here. It's not necessarily that we have cattle backed up to a certain degree. We just had a really good weather the last several months. So 25 plus over a year ago, that puts our production over a year ago as well. Cash slipping is the new trend now. We've had a few weeks here where it's not gone down as hard as what the board has, but we're seeing that trend start to go lower here for a little bit. So those are two things that we need to have turn around. Some more hours could be cut with a few more plants this week too. So we certainly got to push this big stone uphill moving forward here for a little bit.
So those kill cuts, Joe, is that why we saw boxes pop as strong as they did yesterday or not?
I think so. It's usually a pretty good dynamic when you have another set of kill hours to cut back. And then we'll see the boxes pop a little bit. But that choice select spread looks a little funky. Close to even price right now.
Yeah.
Don't necessarily like that, but yeah, if I was a retailer, I would say look at give me all the choice you can. But maybe that's another story for 2-3 weeks down the road.
So, Joe, as we said, cash has not fallen as much as maybe it could have in light of the negativity from the bovine influenza that we have had hit the market. But what are your thoughts about this week? Can we hold things together, or how much lower do you think we might be? Because the show lists actually look not terribly big.
Yep, the show lists have always been decent. The last decently small, I should say, the last several weeks. There was maybe a scare tactic bid out there yesterday at 180 in the south. So they're it's kind of interesting. They're looking for cattle on a Monday, but a little bit lower bid too. I don't know if I quite trust it because the trend is lower for cash right now. Last week we lost quite a bit of our leverage, unfortunately, and even Friday there for a little bit it was scary because most packers just flat out just pulled their bid. So we got some work to do there, but I would call it a softer 1 to 2 lower would be my guess for cash cattle this week.
So the hog market, at the same time that cattle have been slipping, have been hitting new contract highs. We're hitting more contract highs this morning. Have the funds just kind of taken their money out of cattle and put it over into the hog market or not?
That's what it looks like to me. I'm a follower of the open interest. Every morning we take a look at it here, and the other day it was neck and neck, and a few days ago all of a sudden it's like, whoa, hogs open interest was over 300,000, and the cattle just started getting below that, and now a big change yesterday, out of 6,000 for cattle for open interest, and up 5, I think, or 6 again for hogs. So that's that news story this morning with the open interest. It looks like the funds they're not playing the spread. They're just flat out getting out of cattle and going into the hogs here, where we can talk about some very, very strong fundamentals.
Yeah, let's talk about fundamentals. Cutouts over $1 or $100, I should say now, but we're getting a little bit overbought. So how much farther can we push that, do you think?
Well, I think we're getting probably close to at least have one of those little pauses. In the hog stochastically, we're very overbought up here. We're even $4 or $5 away from some of these small moving averages that the market tends to kind of at least go back to, whether it's well below it or well above it. The market tends to kind of back up there. But yeah, product is scooting higher. You saw a smaller kill yesterday. I think there's a plant that was dark yesterday for some weird reason there. But this hog number, big short, not shortage, but they're definitely not out there like we maybe thought they were a couple months ago. But even these open market isoines and open market feeder pig prices from 2 months ago have just doubled. Pretty much. So it is crazy in an environment with the hogs that you can have 2 weeks prior that there's plenty of available isoines and feeders to 2 weeks later, all of a sudden it's like, where'd they go? So an interesting thing happened overnight, almost in that respect.
That's pretty crazy, like you say. We've, and I didn't mention the cash trade, but cash has been pushing this too, hasn't it?
Right. Yep. So that just kind of, basically it solidifies that we're looking for hogs. I know there's not a whole lot of cash negotiated stuff out there, but have plenty of producers that say, I don't have a problem, calling up the packer and getting a load in here and there. And usually that's such a struggle. But right now it's just pretty easy to get them in. So that is a great sign.
And the grains all sitting back here this morning, which obviously does help out the livestock complex. But grains, is that a weather trade? Because it feels like we don't have much weather premium in that market at all, Joe.
Right. Yeah. But look at the forecast that came out this morning, and for majority of the Corn Belt, 6 to 10 day outlook, we're above normal temperatures, and there's staying away from any moisture, big moisture calls anyway, just except on the weekends. But since the weather's been so good the last several months, these guys are just itching to go. And then now this forecast has got the green flag just waving. We're going to go. We're going to knock out some acres, and that's going to keep the lid on things here for a little bit yet.
Yeah. We also went up on a chart basis and tested kind of the top end of the ranges, and we still have not been able to take these resistance levels out either, right?
Right. Yep. The funds want to see that maybe happen. I think they could go with it, maybe step out of some more shorts. But I think the overall concept here is that, for example, for like corn, our ethanol margins are spectacular and they're crushing it and they're going after it. But this demand just needs to be a little bit better. And yeah, we're over a year ago for corn, but Thursday mornings, when you see that number better, we also need to see more flash sales that happen. We just don't see it happen that often. You need that extra effort from their outside demand to get this thing going. That's why we just have resistance at some of these moving averages.
Yeah. And we did have a flash sale of soybeans this morning, 4.6 million bushels, but the market really didn't care, did it?
Not a whole lot. No, we're still worried about the big brother down there in South America that just basically dominating the whole global landscape. And yeah, we're getting second flash sale the last week. First time we've had one for a while, since end of March, I believe. So it's good to see that, but we just need more of it, basically.
Absolutely. All right. Thanks, Joe. Joe Kooima with Kooima Varilek. That is Markets Now.